The best AI stock to buy in the stock market right now. This is what this video is about. And today got me a little bit surprised because I'm changing my tone on a stock that I talked about just 2 weeks ago. And I was kind of bearish on the company. I wasn't a big fan of it. But I realized I was wrong. I did more research. I was wrong. I made a mistake and I wanted to own the company. And then I have DeepSeek, which I'm very grateful for. DeepSeek, they provided me an amazing opportunity to buy this company at an amazing price. I still believe it could offer over a 20% annual return with a very safe company that's just not just an AI bet, but it's a bet on autonomous vehicles. It's a bet on any kind of future computing and innovation. You could get all this exposure within one amazing company. And I'm gonna talk about it today, and I really hope you enjoy the video. So this stock is ASML, and I said ASML is still cheap at 737. You're literally owning the toll bridge to the semiconductor industry and future innovations. And if you didn't know, I did make a video on ASML 13 days ago, and I was not a big fan of the company. I was bearish on it a little bit, mainly around the China risks and a few other things. And I got a lot of pushback. And I thought maybe I'm making a mistake. So I did more research and I fell in love with this investment. I fell in love with the company. And I got to buy them at $652 per share pre-market. And I'm just grateful. But I still believe it's presenting an amazing opportunity at this price. I'm going to tell you why. And I know a lot of you guys are going to skip ASML just because you did not catch the bottom that you saw 2 or 3 days ago. And this is a major mistake a lot of investors make in the market, including myself. And it's mainly anchoring, where you see a price, and then if it goes up from this price, you say, oops, I missed it, I'm late, you know. And Buffett talks about it with Disney and Walmart, how he missed thousands of percent on the upside just because he got anchored to a price that he saw a few days ago or a few weeks ago. So just stop focusing on the price. If you watch the video, you look at the fundamentals, you understand the company, you'll know that even $733 or whatever it is, it's still really cheap for an amazing company like ASML. And if you don't know what ASML does, I talked about it a little bit more in another video, but they are mainly in the patterning phase of the semiconductors. They have, you could say, a monopoly, over 90% market share, and they're estimated to be 10 to 15 years ahead of China and ahead of the other competition because they spent billions and billions of dollars in capex over the last few years to develop this technology. And they're pretty much the only company that has this advanced technology. And that's why they have just amazing company. That's why they could charge higher prices. And that's why they have pricing power and a competitive advantage. And ASML is not just a bet on AI, but it's also a bet on everything else, on data centers and storages, on industrial electronic, robots, autonomous vehicles, smartphones, consumer electronics, anything you could think of that has to do with electronics, with computing, with innovation. You're getting exposure to it with ASML. And it's only going to grow from here, especially with AI. It's not going to shrink. That's all I'm going to say. Now, the last earnings report was very impressive, I have to admit. 9.3 billion euros in net sales and net bookings, which is pretty much, you could say, the backlog. You could kind of say that. This is what the market cares about. It came in at 7.1 billion euros. And that was a massive jump from the previous quarter, which was only at 2.6 billion euros, that has caused the crash. And everything else in terms of net sales and other things, it's been getting better. And I'm just loving the company again. Now, one of the mistakes I made in my video is I talked about ASML's own guidance for 2030. And I said that China makes up 47% of their business. So what's going to happen if, China develops their own technology, or if something happens, or any kind of geopolitical risks or whatever it is? 47% is a lot, and I'm not comfortable in it. Now, I did not know that the management actually said that, the long-term average has been 20%. There's some kind of a special situation where it had China at 47% and it was not sustainable. And in their own guidance, they factored in China going from 47% to 20%. So that has really changed my thought process on the company. And the China risk was not as big as I thought, and it is shrinking, as being replaced by South Korea. And mainly the United States, they've been ordering a lot more of those machines. And now it went from 47% to 27%, and it will likely go to 20% or below. And it's all factored into guidance, which is what I care about. And you can clearly see it over here. China in the black, it went down. And you could look at the yellow, which is United States, has been massively increasing, and now they're their largest customer. So that makes me feel a little bit better about owning a company like ASML. Another mistake I made is I believed that the company was extremely cyclical. And it is cyclical, of course, it's in the semiconductors. But whenever they sell those machines, they make 25% of their revenues from maintenance, which isn't really as cyclical as just selling new machines. That's very different. So it says new machine sales account for about 75% of ASML's revenue, with the remaining 25% coming from services and field options, including maintenance and upgrades. So that's just an amazing thing I did not know about the company, and it provides more predictability for earnings than I believed. So it's not 100% cyclical. You could say it's 75% cyclical for ASML. You look at the forward PE ratio, it's trading at 29 times forward earnings. And the 29 times forward earnings might look expensive, but I don't believe it's expensive if you really understand the business, if you understand why they have over a 93% market share and why that's gonna stay for the next few years, and how you understand that ASML is like a toll bridge. You need ASML to make all the chips. Taiwan Semi needs ASML. Samsung needs ASML. All those companies, if they want to expand in the United States, they need new machines from ASML. They need to maintain them. And this is just something that's really priceless. But this is also a company that grew earnings per share 22% CAGR since 2014, and it's expected to keep growing 20 to 23% for the next 3 years. So assuming no multiple contraction from here, and I don't believe we're gonna get one, we're likely gonna get an annual return from this price, in my opinion, close to the earnings per share CAGR of 20 to 22%. It's very, very possible, and I could easily see it with the company expanding margins, expanding everything. I could easily see 20, 22% a year, even from this price from 737 with the ASML. And something else you have to keep in mind is the company reports very little stock-based compensation. So this 29 times forward earnings is much more accurate than companies like Amazon, which I own, and other kind of tech companies in the United States where they have so much stock-based compensation. It looks like it's trading at 22 times, but in reality it's trading at 40 or 45 times. This is not the case with the ASML. They have very little stock-based compensation. They buy back a lot of stocks. They issue dividends. They're very good with their shares. And they don't do a lot of stock-based compensation, which really makes the 29 times earnings much more accurate than you believe it is. And after looking at everything, I still believe ASML is a buy. If it goes lower, I'm gonna buy more, just being honest. I love the company, and I see 20% minimum annual return over the long term, which is gonna mirror its earnings per share growth. They're gonna continue expanding margins, raising prices, doing whatever they could do. And again, it's not just a bet on AI. ASML did 22% plus CAGR in earnings per share before AI. And even if AI slows down a little bit, I still believe the company can pull off something amazing. And this valuation is not expensive as most people believe. And this is all I had to say about ASML. I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.